All right. So I want to first hear kind of a little background, kind of get the whole story. So prior to your experience that we're going to talk about, what were you doing? What's been your background in trading?
Geez, probably. Well, if we go way back, I was electrical engineer working for Texas Instruments, and I remember talking over lunch hour with the manager, and he said something like, "You know, us engineers, we make a nice salary, but we never spend any time figuring out what to do with the money we make." And
Okay.
that probably got me started in investments on a very basic level. Then I retired after 20 years with TI, and that's probably where I started dabbling a little bit more with trading,
Hmm.
but really wasn't that successful, just no real strategy or anything like that. And then probably about 10 years ago, started playing around with some income options strategies, that sort of thing. Did okay for a while, and then you know how
Yeah.
that works. It kind of
Right.
catches you after a while. Um,
So let's sit on that for just a second.
yeah.
It's remarkable to me how many engineers turn into options traders that I've talked to over the years. That's a very common thing. And you were attracted to income options trading, right?
Yes. Yeah.
Okay. And it was the experience of it works, it works, it works, and then it doesn't. Is
Yeah,
that
and I
right?
think it's the initial probabilities you're looking at that you
Hmm.
really like. That's attractive. And I
Yeah.
think that's what gets so many people in initially. So
Right.
yeah.
Okay. And then continue from there. So where'd you
Um,
go?
yeah, I I'm a lot of different option strategies and all that for a few years, and really didn't do bad, but didn't do as well as I wanted to.
Hmm.
And then last year, I started looking at this auto trading and all,
Hmm.
and Preston had that course, took
Right.
that, and that helped me a lot. Just I think you needed someone to walk you through the steps of getting trade stations set up and going. And then once I could even do a little trade, you can see how it works, see it traded, does everything I could do much better, and all
Right.
that. And
Right.
I got into it. So and so so then I played around with massaging his volatility trade there, got it a little more to my liking, but I really struggle with that trade because it's loss, loss, loss,
Right.
loss, and then big game, right? But I
Yes.
could still see the potential of it, but I have it in as a strategy, but it's really small type thing.
I
Uh,
agree. It's a great component to a basket of strategies.
Absolutely.
Hmm.
Absolutely. Yeah. But from that, I go, well, what if you took the opposite side of that? What about when
Okay.
you weren't in the volatility trade? What about going long something? So I started playing with that, but I massaged the strategy from what he had to get something to my liking. And so it ended up being QQQ works really well with that.
Okay.
And there must and question, but it doesn't have to be answered now, but it's a question in my mind is there must be something with QQQ that it bounces back quicker after a vol spike than SPY, than whatever else you choose there.
Right.
So anyhow, but that's what I'm
Well,
going with.
yeah,
I've been
it's a tech heavy ETF, and tech is what's working right now. So it'll be the same thing if you go look at the individual stocks that are moving further and faster. Those are the things, they go down less and they bounce up more. So definitely.
Yeah. Okay.
So
So
to clarify, so when you're not in the long volatility trade, when it's flat, you go long Qs or something else.
it's pretty close to that. I actually got different parameters in the strategy for the long trade, but it works out that there's sometimes a little bit of overlap, but it's pretty close to that. Yes,
Okay.
yeah. I've been trading that live since June. Very happy with it. That I use as kind of, if I call it my core or my largest component of my auto trading strategy. But I use target volatility, which I got watching one of your
Hmm.
videos. And I monitor target volatility just from a spreadsheet. But what I do is once a weekend, I look at where target volatility is at, and that determines my position size of what I'm calling my UVXY QQQ trade.
Got it.
And that is really sweet because that's my lowest risk trade. When you put target volatility on top of a very active volatility, boy, I really like the looks of it. But, but when I put those two together, I don't have the exact numbers in front of me, and I'm thinking back to last June or so, but it was like better than 10% return a year, and it was like less than 7% drawdown on it. I got to go back and review those numbers again. But it was something like that. So it's my lowest risk, largest component. But then I started, that's where I'm so used to looking at that UVXY QQQ trade. It was this fall that I said, I was looking at the Eyck investment ETFs. I don't know how familiar you are with them. Kathy Wood, if you haven't followed her, you may want to look her up. But it's an ETF where they're looking at exponential growth opportunities.
Okay.
And I remember seeing her interview on CNBC like 3 years ago, and she was touting Tesla, and Tesla had already gone up so much. I'm going, that's ridiculous. She's talking about 2x, 3x from here. And I thought that had run its course. Well, so last fall, she was right. So I started following her. So anyhow, so the Eyck ETFs are kind of an exponential growth opportunities. And so I just take that and I put it in my UVXY trade. And I'm just looking at the plot of it, the performance graph, love the looks of it. So that got me into, but that's an ETF. What about the individual opportunities?
Right, exactly.
And that's where your strategy really hit home. And at that time, I had gone away from using UVXY because I go, well, that's the volatility for, we'll call it the S&P 500. Right. I'm more interested in, how does the individual stock or ETF roll around? And I actually went to a 20-period EMA, exponential moving average. And, but then you had the video last month when I joined that, and it had the RSI 14. That actually, if you look at the signals on those, they're very close to the same.
Yep, it can be. RSI can it'd be a little quicker sometimes, and get you out kind of after a big rally. It'll get you out sometimes a little quicker too.
Does it? Okay. Yeah. So I went to that, and then wow, I really, because I was thinking about that in my mind. Well, how do I screen for these opportunities? And I'm calling it exponential growth opportunities, but high beta, whatever we want.
Or I call them asymmetric reward, or fast movers, things like that.
And that's probably the heart of why that strategy really, it felt good to me is, I want to be in those names. I want to be in all these different names, but I don't want the potential risk associated with them. And so with this strategy, by, really reducing that, or I'll just say containing that, I felt much more comfortable with doing it. And then combined with the auto trading, where I don't want to just do 2 of these, 3 of these, 5 of these, because my risk is too high, I felt.
Yes.
So by distributing that out, I felt much better about it. So when I seen yours and what I had been doing and put together, bam, that's where I put 20 of them on almost immediately.
Yep. And your outcome from that, as you shared with me, was a 10% gain on good size, 6 figures, 10% gain in a week. Is that what you told me?
Yeah, it was less than a week. It's more like 7% now, it looks like, because it came down a bit.
Fluctuations, yeah,
there's going to be fluctuation. And that's what I'm watching now is, how do I feel about this size, and
yes, exactly.
Yeah, so anyhow, but really excited. The only other thing I started thinking about this morning along the same lines is, in part of your screening, you did the look back 6 months or a year for 100% gainer. Kind of go, well, how can we, and I know it's impossible, but how can we get them before the 100% gain?
Right.
At the threshold. So my only thought there is, on a side for some more buy and hold, I've been playing around with some SPACs, So I've been following Chamath and his SPACs, and they've been doing pretty well. But what interests me is that initially on the SPAC, they'll double in a few, well, they have been doubling in a few months, but as they go out in time and as they announce the company they're going to purchase, that's the point I'm thinking about just flipping them over into the auto trading strategy.
Okay.
So once they announce that, hey, Chamath is buying into Open Door, flip it over to there. And I think, well, at least the potential for high growth opportunity there. So I'm going to play that a little smaller.
So yeah, I don't do it with SPAC, but I do that with other names. So there, I've got names like AHT. So that's a distressed hotel holder. And it's one of the, if I followed signals on it, I'd get whipsawed because I'm just waiting. And the price is too low. You don't want to trade it a lot. Slippage would just eat you alive. But I'm just sitting on this small position that could triple, quadruple, just to go back to where it was a year ago and not even close to where it was 5 years ago. And at that point, it would reveal itself as a totally changed asset, really working fine. And then and then move it into a more active approach to control the risk of it falling back down.
Love it.
But right now, zero is my stop. That's the position size is it can go absolutely delisted to zero, or it can go up 5x. That's a great trade for me. I just sit on that one. That's I got auto trading here, and I've got actually on this computer, I just moved to a different room, but I put those little core positions on that I'll hold and see how they play out. And then I might switch them over later.
So I had something like that. I had AMC and I bought it at $2 and I put a stop at 190 because looking at the graph, it had just rounded the corner of this bottom. So I go, okay, I'm going to put little risk. I could have just left it on for zero loss if that. And then it bumped up 20%. I just said, close it because I don't really believe in it long term. And that was before all the Reddit stuff came out. So
that was one I actually had on auto trade because it actually came, I think it was Weiss ratings or something. It was one of those, just those emails, I'm on all these emails. I get too many emails every day, but I won't unsubscribe because things like this happen. And they just said, here's a distressed asset we believe can turn around. Or it might've been somebody else that said it. So I just, put it on an auto trade system and woke up one day and it was the biggest winner of the week. It's like, okay, you never know which one it's going to be.
And I think now that I've been through this in your video and got the auto traded on in that's exactly what I would have done in the AMC, but at the time I hadn't got into the, this kind of portfolio. So anyhow, but that's why I love it. It sits with me really well right now.
Awesome. Awesome. Yep. So that's to recap kind of for those who are listening and they're not quite sure what we're talking about as far as the transition from ETFs and a volatility instrument to individual stocks is I laid out an approach to say, let's filter the 6,000 stocks to a few hundred or 50 or 30 or whatever number is going to work for you. And then study those and see which ones pass the test, have low liquidity risk, because and I'll kind of, I'm going to take a little rabbit trail because it's going to help. I've had this conversation 3 times in the last couple of days where they bring up something that's moved a lot and they try to figure out what they should do about it. Bitcoin's up a lot. What should I do about it? This penny stock's up a lot. What should I do about it? I want to buy it or I don't. Silver's up a lot. I should have been in. I should have bought more when I was in. And they're just like all these like regrets and doubts and like confusion and anguish about like, what do I do now? And I take all of those things that have moved up without me as, the stock just raised its hand and said, trade me. Yeah. Trade me from now on. And then I'll check it. I go through my list of reasons why it wouldn't work or it could fall apart. And then if it has more probability of working than not, turn on a chart, automate it. And then I basically forget about it. And then once a month or so, I go through every equity curve and I just look for something that's just totally abysmal. And in the last year, I've only gotten rid of 3 things that actually just really did terribly.
Yeah. I mean, prior to the auto trading, that was me in a nutshell. I put something on, but then, so AMC goes, oh, geez, that went up a lot. I don't get it. Take it off. So there was no conviction there. So with this, I like the put it on and forget it type thing.
Yep.
But that was another question. Now that I'm running it a bit, was the going forward. Okay, I got 20 of them. When do I pull out? When do
Perfect.
I put in? That sort of thing. I can see putting in as the portfolio grows, I could keep the same position size individually and add another position. So I feel pretty comfortable. But I always want to fiddle with things too much, I think. So my tendency is, okay, let's take that one out and put this one in. That's what I'm going to have to caution myself against, is just my personality doing that.
Yeah. So you want to look for it. Let it, as long as your size is that starting size of small, let that work out. Let it work its way out. Give it a little room for error and just let it play. And then as you find new things, you add it. And then you might see like, okay, I found 5 names I want to add. I might be over allocated now. Then you just go through everyone. The ones that haven't done great, I'll just say the worst ones. You say, I'll go take 5 of those, take $1,000 away from each, if that, I'm just making up a size. Let's say you have 5,000 each. You take 1,000 away from each, and now you've got enough to go put on some more positions, right? Or at least one more position. So it's like whoever, and I kind of think of them as employees. And I've brought this analogy up before, where their back test is only a resume, right? The fact that they did really great in the past is a resume that shows they have the potential to continue, but I'm not going to just give them a job and start sending them paychecks and hope everything goes well and check back in 10 years. I'm going to watch them. I'm going to manage them, but I'll let them have some room. They might have a bad week, a bad month, whatever, but let them play out. And the employee that is lower performing employees get a pay down, what's it called? Pay cut. I'm going to cut their pay a little bit, which means I'm going to cut their size on every trade. And then the winners, the good employees, the profitable, the ones who are creating value, they get a raise. And so what I'll look at is say, we'll just make up this $5,000 number again. So let's say you put $5,000 into a stock, and then you come back and check, not just 1 month, but like 2 months later, you're checking on them and they're showing, like an employee, consistent results. They're doing well. They show up on time. They're, not costing you money. They're making you money. You say, you're doing a great job. Maybe that $5,000 per position has earned you $2,000. Just make up a number. Say, okay, I'll just take 1,000 of that and add it. Now it's $6,000 per position. And you compound those. Now sounds theoretical, but I have studied it. So I've studied, if you take, and it's a little bit complicated, we'll talk about that in other types of mentoring. You can take the equity curve of all the past trades and set your size based on that. So it's compounding, but you can compound a back test. So you compound a back test and you also reverse compound. So if it's losing money, you take smaller trades. If it's making money, you take bigger trades. What happens is the abysmal things like Groupon, you give it $5,000 per trade, and then you give it 4, and then you give it 3. And it doesn't matter how much you lose after that. It's barely going to impact you.
Yeah.
But you take Tesla and it does well, so you give it 6. It does well, so you give it 7,500. It does well, you give it 10. And then that one makes you 150,000. Over the same period of time that Groupon lost you 3. So that's kind of the approach I take as far as, and it's good. It's fun because I get to fiddle with that. Like, oh, you're good, I'll give you a little bit more. You're not doing good, I'll cut you a little bit. That's where you can play a little bit.
I love that. Yeah, because my tendency is more, hey, I don't like you, take you out.
Yeah, right.
And but you don't know what the future holds, right?
Exactly.
So yeah, I like that a lot. Yeah.
Yep. Let them play. I've only taken with probably 52 things that I've added in the last year. I've only removed completely 2 of them.
That is so cool. That's good to hear.
Mm-hmm.
The one mistake I made by putting 20 on real quick, and I was just looking at the numbers of these. I didn't even know what these companies were, a lot of them, offhand. And one example was I had Z and ZG, and I don't know if those both came from your spreadsheet, but they're both Zillow, right?
Interesting. Okay.
So I I don't want both of those on.
Like Class A and some other kind of stock or something.
It was something like that.
Yep. So that's one of those things, like if you wait for perfection, you'll never take action. You know, like you may call that a mistake. Okay, you put the same thing in twice, and then you made $10,000. You know, it's like, and then you keep improving, and just say,
Yeah.
"Oh, look, I'm double dipping here.
Yeah.
I'll fix that."
Yeah. So,
And
but yeah, I'm
I've run
pretty
into
excited
problems.
about it.
I'll throw a stock on, and it won't take the trades, and I found out, oh, it's quoted down to like the fourth decimal place, and my code didn't work. You know, it's like, well, I don't need to spend the next 3 months finding problems. You know, I'll find it later, you know, and fix that one.
Yeah, yeah, and my problem isn't I pull the trigger too quick is my problem. So I
Hmm.
just jump in things, and then hey, if I don't like it, doesn't feel right, bam, it's out.
Hmm.
But that, quick question on
Sure.
GBTC.
Yeah.
I was going to put a real small position on in that, and it didn't allow me to turn on auto trading.
Yep. You have to call and ask for over the counter permission.
Okay, because I called them yesterday, but I was on wait for 30 minutes and then I hung
Hmm.
up. So I assumed it was something like that. But
Yep.
um,
Yep. So just keep trying different times a day, and you'll get through. But you just have to talk to somebody, have your account number ready, tell
yeah,
them you want to trade over the counter, you've done it before, and then you log off, log back in, and it'll go.
got it. Yeah, cool. Good to know.
Yep.
So,
Yep. I had to do that for one. Then I moved in a Roth IRA over, and I had to do that for that one too that I had.
got it.
Yeah.
Yeah. So are you doing this type of trading in IRA?
I have a regular margin, and I moved in a Roth IRA that I had. I moved that over just to let that run too. Yep.
So do you, with a number of positions, do you not run into too many trades in 4 days?
Yes, it's much more limited. I trade daily.
Yeah. Okay.
Yeah, because you don't get the day trade buying power and all this stuff. So I just do some daily stuff in that one account.
Got it. Right. Yeah.
Yep.
And that's where my UVXY trade, I kind of moved that around such that I could do it in an IRA. And I do
Mhm.
think there's a chance once in 5, 10 years it might go over, but then I just put the money in a different account and wait out the 4 days or whatever.
Yeah.
So
Yeah.
cool.
Yeah. Awesome. I think I really hope this can be inspiring for people. I know there's some others that are doing well too. Keep it up. And then I'm always here to help. And I got a lot more things that I'm working on that I can't wait to share with you too.
Great. And just want to say thank you for all you do and really do appreciate it.
You're welcome. My absolute pleasure. I really, really enjoy it. If I had to just do it by myself and not get to share it, I don't know that I would enjoy it at all.
I hear you.
Yeah. Yeah. Awesome. All right. Well, thank you again, and we'll chat again soon. Sound good?
Great. Thanks, Andrew.
Thank
Bye.
you. See you.